Hello and welcome to Finextra. I'm Emily Haller and I'm here with Matthew Davies of Bank of America Merrill Lynch, and we're at Money 2020 Europe in Copenhagen. Thank you for joining me.
It's a pleasure to be here.
There's a proliferation of real-time payment systems globally. What's the business case of offering instant payments to banks' customers?
Do you know, it's a really interesting question because I think banks have really struggled to find the business case. There is the consumer demand, but the reality is there's less and less margin in offering real-time payments or any payments, in fact. So there's a big investment. If you look at the technology investment required, it's huge. There's real-time gateways that banks have to put in place, and when you think of how banks are set up, their back offices are really set up to offer services throughout the week and shut down at weekends. So it's a big investment.
So what are the technology demands of moving to real-time payments?
Well, the gateway investment is the single largest piece. You know, when you think of how most banks operate, it's batch-based processing. When you move to real-time, that's a significant shift and a significant change. We're having to invest in that space, and I think all banks are investing very, very heavily. But the business case remains challenging if you just look at a pure payment.
How essential is it to offer innovative services off the back of moving to real-time payments?
To my mind, it's absolutely essential. As I've said, there's not so much margin in the real-time payment itself. So really, where the payback is going to come for banks in making that investment is really in the other services, the ancillary services that they can sell to their customers, which will ultimately drive real value for their customers. That's where they're going to get the return on the business case.
Matthew, thank you very much.
Thank you.
And thank you for watching.